the market is anticipating rate cuts. It's already baked into the yield curve that the Fed's going to start cutting rates, well before the end of the year. And why does the market think the Fed's going to cut rates? Well, because we're going to be in a recession. And eventually, the labor market's going to break in a bigger way than it already has broken, but nobody really wants to acknowledge it. So the markets are looking at this recession and thinking the Fed's going to cut rates. Now, they're right about the recession. We're going to have a recession, and it's not going to be mild. And the way the Fed has reacted in the past to recessions, mild or not, is it cuts rates. So the markets expect the Fed to do the same thing. Well, Powell came out and threw cold water again on that expectation by saying no. The Fed has no plans to cut rates. Even if they stop hiking, they're not cutting. Rates are going to stay where they are. He said it would be very inappropriate of the Fed to cut rates, even if the labor market softened because it's coming from such a strong level. Unemployment is so low that the overriding factor is how high inflation is. And he admitted again that inflation is not going to come down quickly, and that anybody who thinks it's going to come down quickly is wrong. He thinks inflation will come down, but it's going to be slow, and it's going to take a long time to get there. And therefore, the Fed cannot give up on its policy, and that rates have to stay high. Now, that I thought was one of the most bearish comments for the markets, because to the extent that the markets start to believe the Fed is more resolute and it's going to keep rates high, come hell or high water, the markets have a long way to go down. What's interesting is that didn't send gold down. That sent stocks down, didn't send gold down. Gold went up. Gold stocks, they didn't soar, but they had a positive day. And that is in contrast to the way the markets had been responding to that type of talk, that type of hawkish, tough talk on inflation fighting didn't go over well in the gold market. It scared the gold market. It ain't scaring it anymore, either because the market sees through the bluff or they see through what happens as a result of this, which is talking tough about inflation, which hurts the markets, the banks, and the economy, guarantees more inflation. Because ultimately, it doesn't matter what the Fed's saying now or how tough they want to pretend to be. When it gets right down to it, when everything is imploding the way it was in 2008, the way it was in 2020, we know what the Fed's going to do. It's not going to matter how high inflation is. And in fact, somebody's asked Powell if he would accept 3%. Like, what if you get inflation down to 3% and, things are softening a bit in the labor market? Will you be content to kind of back off at 3 and just hope that the market does the rest for you and that we eventually go down to 2, right? And in a roundabout way, he basically said no. He said, we're not settling for 3. 2's the number, right? We still want inflation to be 2%. So no, we're not settling for 3%. If we get to 3%, we're going to keep on fighting. If we have to hike rates to get from 3 to 2, we're going to hike rates, even if the economy is softer, even if we're in a mild recession. Now, again, we may be in a protracted, anything but mild recession. We may be in a depression, right? Unemployment can go way up and inflation can still be way above 3%. And again, what about getting the average? Powell is admitting that it's going to take a long time for inflation to get back down to 2%. How many years is that, by the way? And then how many years of sub 2%? How many years of 1% inflation or 0.5% inflation will we need to get that average down to 2%? Of course, that's never going to happen, right? They already tossed that policy in the trash can without ever bringing it up again. They're just hoping everybody forgets about that, right? That, I didn't forget about it. I'm reminding them. But they're hoping the world forgets that they ever introduced the concept of inflation averaging, because they're never going to try to do that. I mean, they're not going to try to average 2% inflation. They know that's never going to happen at this point. The average is going to be way above 2%. They're just trying to say that at some distant point in the future, after prices have gone way up, they're hoping that they eventually slow down and only go up at 2% a year. But I don't think we're going to see 2%. Janet Yellen said we're not going to see another financial crisis in her lifetime. It's more likely that we don't see 2% inflation again in her lifetime. So that's more likely than, well, the other one has already not happened. So forget about that, just starting from scratch. But I doubt in the lifetime of Janet Yellen will we see a full year where inflation is just 2%, even the way the government measures it now. Now, maybe if they dramatically change the CPI, maybe they can make it happen with that kind of sleight of hand. But with the CPI we got now, as bad as it is, because that probably means that if inflation is 2%, according to the CPI we got now, that means it's 4%, according to the CPI we had in the 70s and 80s. I don't even think we can get there. I don't even think we can get down to 4% because that's how big this problem is. That's how much inflation is already in the pipeline. And of course, as the debt is exploding, the debt is growing much faster than the economy. So the problem gets bigger with each passing day. And so we can't solve it now. It becomes even more difficult to solve tomorrow because every day that goes by where we don't do something, we make the problem that no one has the guts to solve bigger. And the bigger the problem gets, the scarier the solution is. And so the less likely we're going to adopt one. And so I know that the end game here is going to be collapse. It's going to be runaway inflation. Powell was asked, what have you learned from your experience, right? These banks failing. What Powell said is, yeah, I learned something. I learned that banks could fail a lot faster than I thought. That's it. That's what he learned from all of this. And then he even said, yep, that's it. That's the only lesson I got. He learned nothing. Nobody in government ever learns anything from their own mistakes because Powell made the mistakes. His monetary policy and the monetary policy of his predecessors at the Fed, of Janet Yellen, of Ben Bernanke, of Alan Greenspan, it's that monetary policy that caused the crisis that we have right now. You would think the Fed would have learned. No, doesn't learn anything. You're never going to stop repeating your mistakes if you don't learn from them. I mean, the only good thing about making a mistake is that you can learn from it so you don't make it again. But the government never does that. The government never learns from its mistakes. It just makes them again, only bigger. And that's what's happening. And Congress, again, didn't learn from their mistakes. Yeah, I was looking at Elizabeth Warren, was on CNBC, giving everybody advice on what we need to do to make the banks more solid and more secure. She's part of the problem. She's been in Congress. They wrote the laws, they passed the regulations and the subsidies that created this mess. This is the government's fault. This is the Fed's fault. Yet nobody at the Fed, nobody in Congress, nobody in the Biden administration is learning anything from their mistakes. All they do is blame capitalism for their mistakes, blame a lack of regulation. No matter how much regulation they put on after every crisis, the next crisis is always because there wasn't enough regulation or because maybe one little regulation got rolled back. Oh, deregulation. We added on 10 regulations and you took one away, and that's the problem. That was the reason everything collapsed. Not the 9 regulations that were still there. No, the one that you took away, that's what did it. So now we need 20 more on top of that to fix the problem. So the real answer to Powell's question was, what did you learn? Absolutely nothing, right? Because I never learned anything, and neither does anybody else at the Fed.
The market has been anticipating rate cuts from the Federal Reserve due to the possibility of an upcoming recession. However, Powell's recent comments suggest that the Fed has no plans to cut rates, even if the labor market weakens further, because inflation is their overriding concern. This news is seen as bearish for the markets, as investors are worried that higher rates could hinder economic growth. Surprisingly, gold prices increased, and stocks decreased after the statement was released, indicating that investors are turning to safe haven assets as a hedge against market volatility. This reaction suggests that investors do not believe the Fed's tough stance on inflation, and they are still expecting the Fed to resort to rate cuts during a crisis, as they have done in the past. The Fed's goal is to maintain an inflation rate of 2%, but Powell has admitted that it could take a long time for inflation to come down to that level. Despite introducing the concept of inflation averaging, the Fed has no plans to average 2% inflation, and they have abandoned the policy without mentioning it again. In conclusion, investors are left wondering how the Fed will react in the face of an economic downturn, and it's important to keep a close eye on the situation to make informed decisions about your investments. So, what do you think about the Fed's tough stance on inflation? Do you agree with their decision not to cut rates, even if the labor market weakens further? And how do you think this news will impact the markets in the long term? Be sure to drop a comment below and let me know your thoughts. And if you enjoyed the video, don't forget to hit that like button.